April feels like a nonstop April Fool's joke in the financial markets. Bitcoin's up, then down, gold's spiking, and the Fed might cut rates unexpectedly. But here's what really matters. Mortgage rates are shifting, real estate prices are bouncing back, and there's talk of a recession brewing. So, what should you do right now if you're buying, selling, or just trying to survive this wild market? Let's break it all down. All right, April is here and it almost feels like this month has just been a nonstop April Fool's joke in the financial markets. They have been all over the board.
I don't know what's going on here.
I know.
Bitcoin is up one day, down another day, and at this point, they've basically retraced everything over the last 5 months. So obviously, many people claim crypto and Bitcoin are a great hedge against inflation and a great store of value. The interesting thing is that oftentimes they actually move with markets instead of against the markets. So very interesting. However, gold seems to be the consistent winner over the last 6 months, rising from about 2,600 up to, give or take, depending on the day and the hour, around 3,200 an ounce right now. So kind of cool. If you have gold, great for you. If you're in anything else, it's kind of been a volatile, wild ride.
Are we safe?
Yeah, I think so.
So my advice at this point is take a step back, take a deep breath. Markets shift, markets breathe. Sometimes they're down, sometimes they're up. Over the long haul, if you have a nice diversified investment, usually things tend to come out all right after some time. So unless you're trying to retire today, you might be all right. Just let it ride. In other news, the yield curve inverted again, and historically that has been a potential indicator of an impending recession. We'll see how that plays out. Fed will be meeting again. There is increased speculation that they may do an emergency rate cut. We shall see. A lot of the experts are actually predicting pretty much 4 rate cuts for sure this year, and potentially a 5th. I think there's about a 75% chance of a 5th rate cut. So we'll see how that plays out. I'm also seeing a couple reports, and we have to wait and see what the Fed's next meeting says, but there may be an emergency rate cut in the future. Now, keep in mind, home mortgage rates and the Fed rate are 2 totally different things. Sometimes they move together, sometimes they don't. So overall, mortgage rates have actually been improving over the last couple months. They have been overall trending down. I would say they're probably more in the 6.625 to 6.875 range, obviously depending on your credit, your profile, everything else. But that is down from, the 7.125, 7.25, 7.375 rates that we were seeing months ago. So there is some good news there, even though they've been up and down a little bit over the last couple of weeks with all the stock market and bond market changes. So in addition to that, some totally random Italian news, the luxury brand Prada is in contract to purchase Versace for $1.38 billion. Go Italian luxury brands. Let's talk about tariffs for a second. I am doing my best to get an elementary level education on tariffs. That's been challenging. There's a lot of different impacts that those can have. Top question is, though, that I'm trying to answer, how can those tariffs impact the real estate market? That's what you guys all care about. That's what I'm here for. For anything else, contact your financial advisor. That is not my area of expertise, and I'm trying to stay in my lane. But that being said, there's a couple quick points that I could make on the tariffs. One of those would be if the cost of imported goods gets increased, we're talking maybe lumber, steel, aluminum, copper, all of those things that are used to build homes or renovate homes, that could push the cost of construction or the cost of renovations up. And usually when we see the cost of new construction increase significantly, it also tends to bring up the resale market as well, because folks will basically say, hey, like for like, if I'm buying 2,500 square foot home, I can get this new construction for $950,000. Why not buy a similar resale home that I can currently get for $750,000 and do some renovation? But as that happens, more people look at the resale homes and it brings those prices up in line with the new construction. So we'll see how that goes. Additionally, we could see some pressure if cost of goods, consumer goods, different things, if the cost of that increases, then consumers may not have as much disposable income, or they may not have as high a comfort level to be able to pay increased or higher mortgage payments associated with those higher home prices. So we'll see how that plays out. The good news is, though, like I said, we are seeing mortgage rates come down a little bit. That could help with affordability, but then that could also just get eaten up by the increased cost of new construction and renovation. So I'm going to keep a close eye on that as well as I can, keep you informed every month of where that's going. Overall, I am getting asked constantly, when is the real estate market going to crash? I hate to say it. As I've been saying for years, for those of you on the buying side, sorry, I just don't see it coming. I have said for years that we're going to see a pretty flat market for a while, and that's about what we've been seeing for a couple of years. Basically, after 2022, we saw prices peak out, give or take, in May, June of 2022. Prices dropped as the mortgage rates skyrocketed, more than doubled, really. And then we saw the market stabilize, and it's been fairly flat over the last almost 3 years now. So as I expected, we really don't have a local market in Sacramento that is susceptible to a major market crash. A lot of homeowners have equity. A lot of homeowners own their homes free and clear. A lot of them are locked in at really, really low payments. So then the question becomes, okay, well, Zach, what if somebody's getting behind on all their payments? What if they can't afford the credit cards and the expensive new car that they bought and this and that? Well, I think what we're going to see is that a lot of folks are going to look at the market and they're going to say, okay, we have a $3,200 a month mortgage payment on this beautiful house because we're locked in at a low rate, but things are getting really, really tight right now. Let's see what our options are.
Let's see what you got.
Okay, we could sell and, walk away with a little equity and maybe buy a smaller house. Well, guess what? At today's rates, that smaller house is going to be the same or higher mortgage payment. So that doesn't make sense. Why keep the same payment but get less house? So that's out. Well, what if we rent? Okay, well, rents are pretty expensive as well. Again, you're going to be looking at a case where we sell a really nice house with a $3,200 a month payment. We have to go rent a house for $2,800, and it's, again, half the house. So I really expect that a lot of folks are going to say, okay, the financially intelligent response to this is we need to get rid of the expensive car. We need to par down. Maybe we're not taking the crazy vacation this year, the international vacation. It's just going to be a nice weekend road trip. And people are going to do on some level whatever they can to keep their homes, which is going to be drastically different than what we saw back in 2008 when people went, look, I have no equity in my house. In fact, I'm upside down. There's no incentive to keep this house. I'm paying more than what I could go pay in rent. Just get rid of it. Let it go. I really don't think we're going to see that this time. Now, that's a little bit different in other states or other metro markets, but in the Sacramento region, that's my expectation. That being said, again, I still think we're going to see volatility in commercial markets and in the auto markets, and we may see an increase in restructuring loans. Maybe home equity loans are going to increase where somebody says, all right, I need to consolidate my debt. I don't want to mess with my fixed first mortgage that's got a 3% rate, but I do need to capture some of the equity in my home. I'm going to take a home equity line of credit, pay off these credit cards, and adjust financially in that way. So we'll see how that goes. I expect to see more of those. And from the lenders that I've talked to, they're doing a lot more home equity lines right now. But I still think people are going to be dumping their expensive vehicles that they've potentially overpaid for. And that's going to put a lot of downward pressure on the auto industry. Keep an eye on all those delinquency rates. Let's jump into the local data. In the Tri-County area, number of homes for sale increased 10.9%. Pendants are up, and this is our full month data for the month of March. So now that we're through March, I have all that data. So this is for the month of March. So March over February, pendants were up 32.9%. Sold homes increased by 19.7%. All great activity for this time of year. That's exactly what I would expect to see. I would say the inventory is actually increasing a little bit more than we've seen in the last 2 years, which is good news. That's actually bringing some balance back to the local real estate market. The days on market, time on market dropped from 47 down to 40 days. The list to sale price ratio still holding stable at 98%. That's still very healthy. That just means some sellers are overpricing a little bit and they have to adjust in order to get their home sold. The median sales price for March increased 2.5% to $610,000. Now that is the Tri-County area median home sales price. That is almost back to the peak pricing that we saw in spring of 2022. So that is good news. Like like I said, rates went up. We saw home prices drop a little bit. The rates put a lot of downward pressure on the market. It stabilized, and then it has actually come back a little bit overall. Placer County is a little different, so we'll get to that. And then the months of inventory, we're at 2.2 months right now. So still solidly in the seller's market category, but that 2.2 months has been a steady rise since the lowest inventory levels that we saw back in 2020. So again, good news overall. Healthy, stable movement in the right direction. I'm not paying too much attention to each monthly change, but I am looking at the overall trends of the market. And all of this is right in line with what I would hope to see for a stable market in the area. So let's dig into Placer County. Similar trends overall, but slightly different. So home sales were up 14.8% for March. Pendants were up 30%, and sold homes increased 26.3%. So we had a really quiet winter in Placer County, but we have really jumped up for our spring market. So really strong movement there. Days on the market dropped from 50 to 41 days. The list price to sale price ratio held stable at 98%, similar to the Tri-County area. And in Placer County, the median sold price increased 3.2% from February to March. So it is up to $670,000. However, $670,000 is slightly lower than the pricing from 22, 23, and 24. So Placer County saw a pretty big drop when the mortgage rates went up in 2022, but we are coming back fairly well. We're just not quite back to the pricing that we saw in 2022. I'm very curious to see how the next couple months play out. If we have a couple really strong months in Placer County, we may get back there this year. We'll see. Can we get back to the 680s or 690s that we were seeing? I don't know if we'll hit that this year, maybe next year. Median sales price for Placer County actually peaked at just over $700,000 back in 2022. So we have a little bit of a value gap to make up for. We'll see how that goes. Inventory in Placer County has been creeping up since 2020. We are still also within that seller's market category, which is less than 3 months of inventory. Right now, 2.3 months of inventory in Placer. Anyway, that's not to be said that some home sellers aren't overpriced and some aren't underpriced. Really depends on the property and where it is. I actually just showed one this weekend. They ended up getting 10 offers this week. They are in contract way over list price. And on the flip side, I've got some properties that I'm negotiating with my buyers to get those in. They're getting credits. They're getting slight reductions in the sales price off of the seller's listing price. So great news there. And I'm seeing the same thing on my own listings. Some were getting multiple offers. They're flying off the market. Others, it's taken a little bit longer to move, and those are getting closer to that 40-day average mark. It really depends on the pricing, the desirability of the property itself, what kind of amenities it has, and the location. Anyway, as I said earlier, my advice right now, don't make any rash decisions. We're seeing the markets fluctuate. So, a good decision today might be a bad decision tomorrow, and vice versa.
Problem solved.
Take your time, be prepared, do your investigation into the market, what would be best for you over the long run, and then we can talk about that. Give the channel a like and follow, like this video. Thank you very much for sticking with me. I will be back hopefully with some more monthly, actually shorter than monthly updates as things continue to move in the local markets and our real estate market. As I learn more about tariffs, I'll get back to you on that, and hope to see you back here next month for another update. Thanks.